There. you look up
Cold.
there. You cold?
I'm cold.
Is it a lot colder here than Arizona?
Yeah, I flew in from Arizona, so it's in Arizona. It's cold at night, but it warms up to mid-70s during the day right now.
All right, so right now it's
You
like
just flew
mid-70s
in?
here.
Are your arms tired?
Oh God, Darren.
Oh no, I was warned about those jokes.
Are we doing Facebook yet?
I have to be careful not to set him up, I guess.
All right, 3, 2. Hello, welcome back to another episode of Finance Agents Live. This is episode number 69, and today we talk about the F word. All right, welcome everybody. Thanks for coming on again. This is Tim MC. Today I am joined by a first-time guest. Thank you for coming. This is Carla J, who is going to be telling us all about the foreclosure process. Now, not all about it, because we've been talking about it for hours and nobody wants to hear about it that much. But Carla owns and runs the company. Frankly, to be honest, we're doing high-risk real estate lending. We have enough foreclosures that we don't want to handle it ourselves in-house. Carla's company takes care of that for us and manages all parts of the foreclosure process that can be done without the attorney. And of course, there's local attorneys across the country. So thank you for coming on the show today. Are you excited to be here?
Thanks for having me. I am.
All
it's
right.
exciting.
Awesome. Okay, cool. Today we're going to talk about 3 things. First of all, the foreclosure process. What is it? We're not going to go into too much detail. I'm going to give you a quick run through on the main steps just so you get an idea how it works. Of course, it varies from state to state, so we're not going to get into any of the complexity that happens from one state to the next, but we're going to go over the steps. Second, we're going to talk about if you have a mortgage or if you have clients who have mortgages, how to avoid the foreclosure process. Obviously, maybe just pay your bill, but there's some other things you can do in order to avoid getting into foreclosure in the first place. And then third, we'll talk about the silver lining that comes from the dark cloud of foreclosure. What are some of the positive things that can come out of this? How to turn that frown upside down, right?
Yes.
All right, so let's jump into it. Foreclosure. First of all, we are a high-risk lender, right? So there's a lot of banks out there that'll do this process, but over a long period of time. We have about the shortest process you can possibly have. So let's say somebody misses a payment. How quickly until we start the foreclosure process?
We actually start the foreclosure process on day 10.
Day 10. That's 10 days after they missed for 3 months?
Day 10, the 10th of the month. If your payment's due on the 1st, if we don't have it by the 10th, you're entering foreclosure process.
Okay, all right, so you submit to start the foreclosure process after 10 days. That seems really quick. Why do we do it so fast?
It's very aggressive. Yes, I agree with that. However, the foreclosure process itself can be lengthy, so we want to get a jump on it, primarily because we don't want them to get too far behind, and we want to get the ball rolling and keep our money coming in.
Right, one of the things to remember is once you start missing payments, your interest rate goes up a lot to the default interest rate, the rate that you pay when you're in default. It can be much higher. If you get far behind, all of a sudden it's going to be impossible to become current. We want to make sure that people prioritize the payment on their mortgage since it's one of their most valuable assets. And so we make sure to work with them closely in order to stay on track. Right? There's a lot of banks that will wait 3 to 6 months before starting the foreclosure process. By that point, now you owe 6 months of late fees, penalties, and you couldn't catch up if you wanted to. We don't want that to happen. We want to keep people in good standing. Also, our investors demand that we stay on top of the process, so it's not just us, it's our investors require it. So anyway, that's why we do it so quickly. All right, so let's say it's day 10. I didn't make my payment. What happens? What happens when you submit the foreclosure process? What are the steps?
So I've done some pre-collection phone calls by now just to gauge if the borrower is aware that they've missed a payment. Sometimes an ACH may not have come out of their account and they might not have noticed that it was returned NSF. So by day 10, I contact our loan servicing company that we work with. And I let them know that we're going to initiate foreclosure proceedings on this. Another number of things happen, including exchange of current documents. Once they verify they have all the necessary documents, they refer us to a local attorney.
Okay, all right, and all foreclosures have to be done through local attorneys, so we have attorneys in all 50 states that we work with. Now, if you're wondering about the 10-day thing, we did see a client recently who did their automated payment on the 1st of the month. It bounced. We found out about the 10th. They immediately issued another payment. We didn't immediately start the foreclosure process because they are clearly trying to pay. But when the second attempted payment failed, then we put it into process, even though they started a third payment. If that payment comes through and clears, which it takes a few days, then we could pull it back. And you cancel that foreclosure process pretty easily?
Yeah, it just takes a phone call. So the broker or working with the investor can stop or start the foreclosure process. And if you're willing to accept partial payments, but that's a reason that we start the foreclosure process, is because we want to ensure that our investors and lenders are receiving their default interest and any late fees due to them, in addition just to the regular payment.
Okay, all right. So let's say we come in, you're 10 days late, we start the foreclosure process, we submit a bunch of paperwork, we get referred to a local attorney. That happens about day 15. Once we contact a local attorney, we'll go through some discovery period with them, and then they're going to issue a demand letter. And that would potentially happen around day 17 to 19, as long as the attorney isn't asleep at the wheel, which has definitely happened before. Had a few of those last time we worked with that attorney. So they issue a demand letter. Who's the letter going to, and what is it demanding? And what happens next?
Sure. So the demand letter is going to the borrower, giving them notice that they are now in default and foreclosure status. So we're going to give them notice of the total amount due to bring it current. So we won't accept anything less, and we give them a 30-day time period. So we work again with our loan servicing and the attorneys to make sure that that number is accurate. The demand letter is either sent registered mail or by a process server, but a signature is required so that we know they did receive it. And the clock starts ticking.
Okay, great. All right, so they have 30 days to respond, and there are two ways to respond. They're either going to request to reinstate the loan, and that's going to come with a payment, I'm assuming, or at least the attempt to negotiate a payment, or they don't respond. Those are typically the two things that happen. In your experience, you get a more request to reinstate or more no responses?
No response.
No response. All right. Well, we can't work with you if you don't talk. Yeah. So, all right. So you got 30 days to respond. Let's say 30 days are up. They haven't responded. What happens next?
Then the attorneys order and pull the title, the current title, to make sure nothing else, there haven't been any other liens or attachments or transfer of ownership, to make sure it's the same title that we closed the loan with.
Title means the ownership of the property. We just had a client recently where they started into the foreclosure process, and once the attorneys reviewed title, they found problems on the title, saying, hey, this guy didn't even have the right to get a loan from you. He doesn't even own the property. You may think, wow, that's a big problem, right? Well, thank God that's what title insurance is for. So we don't issue a loan without getting title insurance. So somebody else has insured that. And if it is true, and this is not, we don't know yet, we have to work through the process. If it is true that he didn't have the right to request that loan, then the title insurance will pay us off for whatever we do. So it's not as big of a problem as it sounds. Yeah, I know.
Correct. So
amazing,
we started
right?
the claim process on that.
That is absolutely fabulous.
It is true, yeah. Okay, so I'm sorry, could you go back? We have notes in front of us. I can't see that. Okay, so we got 3 to 5. So after that, they're going to order title. That takes about 3 to 5 days. And then depending on what kind of state you're in, and it's almost 50-50. If it's judicial, you do one thing, and non-judicial is another. What's the difference between judicial and non-judicial states?
So judicial, you go through the justice court, the judicial process, the court. So we're going to file a complaint and serve a summons, and that has to be served by a process server. So we're basically going to sue them based on the note they signed with us to take back our collateral.
All right, so that's if you go to court. Non-judicial, it still goes through the courts, but you don't actually have to go have a court date and show up and argue or whatever you do in court. And that is a lot faster, typically, right?
That's faster. You file a notice of sale, which is a public notice, giving everyone the opportunity to purchase the property. And also, it's still within the time period that the borrower can reinstate. So he also has the opportunity to bring his note current.
Okay, yeah, we just had a client, I believe October 26th was the foreclosure date set, and it came, and then right before the foreclosure date, the client got in touch with us and said, hey, I need another week. I'm trying to sell the property. Can you give me another week? We worked out a deal where we gave him another week, and so that delayed the auction date by 1 week. When that next day came up, they didn't have the thing sold, and then about an hour before the auction, they filed bankruptcy. And
why are we bringing this up?
Well, it's just what happens, and that will delay it a little while longer. But those are the steps you go through. All right. So, judicial, you got to go to court, and that court process is going to take as long as it takes. Is different in every state. Non-judicial, generally, you're going to post that notice of sale, and then it's going to be 4 to 6 months, typically, before the actual sale happens. All right, so that sale date is the date of a public auction. It's always a public auction, right?
Yes.
So we're posting a listing saying, hey, on June 1st, we're going to be selling this property. Show up, and the starting bid will be our entire amount owed. So that's when we get made whole. If no one actually buys the property, then we get it, and then it's up to us to figure out what we want to do with that. What happens after the sale date? Let's say it gets sold at public auction. What happens next?
Some states have what's called a redemption period, Tim, and what that means is the borrower has one last attempt or right to purchase their own property back for what it was sold at auction. I believe there's one state where they have a year redemption period. So, yeah, right, I know. So some of the states have pretty aggressive laws protecting the borrowers, so that's great. Of course, we take that into consideration when we're issuing the loans. Again, if somebody does file bankruptcy, it can delay the process, but bankruptcy will not protect that asset. You cannot bankrupt on a secured debt. Secured debt meaning our loan against the property. There's no way they can say, I'm bankrupt, I don't have to pay you back anymore. No, it's not like that. Secured assets can't be protected, so it can only delay. It cannot stop the process. So the entire process from day 10 to
Day
done.
0.
Well, what's the minimum and maximum timeline?
The quickest I've seen is right around the 90-day mark, Tim. And then there's some on the books for almost up to 3 years. Just depending on the circumstances. So.
Okay, yeah, the 90-day would probably be in non-judicial states. 3 years could be judicial. I know a lender that had a client in Florida, and it took them 3 years just to get a court case. So while the process is supposed to be pretty quick there, getting the court case can take forever, so Florida. All right, so there you go. That's the foreclosure process. Hope you learned something. If you have questions, feel free to type it in the box. Darren's going to be keeping an eagle eye on that. We got any questions so far?
Any questions?
Okay, all right, no questions yet, but don't forget, go ahead and put them in there. Okay. Next, we're going to talk about how to avoid getting into foreclosure in the first place for you or your clients. It sounds pretty simple, but there's different ways to do it. What are some of the ways to avoid getting into foreclosure in the first place?
So you definitely want to pay your bill and pay it on time. You need to prioritize payments over other unsecured debts. So what that means is, you might have an unexpected medical bill or just life throws you a curveball. Pay your mortgage first. That needs to be on the top of the list. Right.
If we're figuring out, if you're in a disaster situation where you don't have enough money to pay all of your bills, and half of your bills are your mortgage, and the other half are a bunch of credit cards or unsecured loans, let's be honest, if you go through bankruptcy or something, you don't want to lose your house. You have value in your house. Credit cards, you can bankrupt the credit cards and never pay them back. I'm not advising you to do that, but that's the reality. So it's better to prioritize payments on your mortgage ahead of things that don't really matter, right? The second way to avoid getting into foreclosure is don't get too far behind, right? Make sure to keep up on the payments. I mean, it's kind of the same thing, but like I was saying before, with some of the big banks, they'll let you get way behind before they put you into foreclosure, and at that point, you couldn't catch up to save your life. Make sure to stay on it so you don't get in that situation. What's another way to get out of a possible foreclosure?
You could refinance your loan. That happens quite a few times. Sometimes it's a stall tactic for people, but a lot of times that's they're refinancing their loan. They think they can get a lower interest payment. Possibly maybe their credit score has gone up. So they could refinance the loan Or pull cash out of their property.
Yeah, when you refinance, often you can pull extra cash out. Say if you got a property worth $1 million, you have a current loan of 400. We could do a refi, give you an extra 100 grand, and maybe that'll cover you for debt servicing for your downtime. Like, let's say you know you're temporarily going to be out of work because of an injury, but you know you'll be back in 6 months, and you just need to be able to cover the payments. Pull some capital out of your property, or maybe you can find that switching to an interest-only loan will give you lower payments. You may not be paying down the principal, but if it's a short period of time and you need relief, that might be one way to do it. Another way to avoid foreclosure is sell the property. I know psychologically or emotionally it might be hard to sell your property, but if your property is worth $500,000 and you have a $250,000 mortgage, you sell that thing and you get 250 grand, you want to sell before you're in foreclosure. Once you're in a foreclosure, when you try to sell the property, people are going to pay you less because they're going to see you're in a distressed situation. You're losing money. Sell before you get into foreclosure instead of afterwards, and you'll make more money. And then what's the last option for avoiding a foreclosure?
Accept cash for keys offer.
Cash for keys. You know, what's cash for keys?
Cash for keys. Yes.
Right. Some people, when they're
cash for
just
your keys.
any
You turn
keys?
the keys over and walk away.
Keys?
all right. Okay.
Not any
Shed
keys.
Okay. Lenders don't like going through foreclosure either. It takes a long time. There's risk there. They might lose money. So there are some lenders that will actually give you cash to just hand over your property. It's kind of like selling it. You're not going to get as much as if you sold it for full market value, but you will get money, so you're not walking away with nothing, and you avoid the foreclosure because you just hand over the property and it's done. So those are 5 important ways to avoid getting into foreclosure. All right, so now let's say the worst has happened. Your client is in foreclosure. Is there a silver lining to this, or are you just done for? What are some of the things you or your client can do to make the situation better?
Well, I feel like communication, as with any problem, is the key. So when your client starts the foreclosure process or knows he's not going to be able to make that payment, just communicate with the lender. Most will work with you, but like I've said, most borrowers are very unresponsive. So when I hear nothing, of course, I'm going to assume the worst. So communication really is the key, and maybe if you could, bridge the gap between the borrower and the lender, and offer some support on the communication side, that the 3 minds together might be able to come up with some solutions that work for everybody.
Right. I can say definitively that if you say nothing, we and other people like us will process the foreclosure as fast as possible. Alternatively, if you contact us and you try to work with us, that could delay things a lot to your benefit, right? We will try to work with you. Again, we don't really want to put you through foreclosure either, so we'd be happy to work with you. Darren, we got a question.
Yes, we do. So OSA, O-S-A, not sure I'm saying that right. I apologize if I mispronounced that, but is asking, do you have to be licensed?
Do you have to be licensed to do loans? Yes, in some states. Do you have to be licensed to be a broker? It depends on how you broker. Do you have to be licensed to go through foreclosure? No. So I think you're probably asking about lending, maybe. But yeah, there's some things you got to be licensed for. Drive a car. If you need a more specific answer, feel free to type it in there so we understand. Okay, so if your client's in foreclosure, you're in foreclosure, communication first. Make sure to communicate. We and others like us will potentially work with you. 2, start selling the property. Right? If you know your state has a 6-month time period from when the demand is posted, the notice of sale is posted, to when they can sell it, you got 6 months to sell the thing, right? Get on it. You got 6 months to get the best price possible. That price is going to be better than having to go to auction and maybe you end up getting nothing out of it afterwards. And then the third one, I'm going to contradict a little bit what I said about communicating with the lender. Communicate with the lender is great, but don't just make up a bunch of lies because the truth's going to come out and it's not going to help you, right? We had a client recently who kept telling us, oh, I got this big payoff. I'm going to pay you in 2 days. I'm going to pay you in 3 days. Oh, the bank's holding my check. I'm going to pay you tomorrow. Oh, I ordered the wire yesterday. You should have it by now, but it was all just not true. I'm not really sure what they gained. Maybe they gained a little bit of time out of that. So I mean, even if you're lying, you're going to get more time for communicating. But in the end, it doesn't really help them out. Alternatively, if they're trying to work something out, we might be able to work something out. So The lies might actually delay, but they don't really end up being a benefit. All right, so that's if your client's in foreclosure. What's the silver lining? What's the good stuff that can happen out of a foreclosure? Is there good stuff? Can good things happen from a foreclosure?
There's always good things.
There's always good
Glass
things?
half full.
Okay, all right, that's a good attitude. So let's say you got a client in foreclosure or you're in foreclosure. What's one way you could turn that bad thing into a good thing?
You could bring your client to us for a foreclosure bailout.
Boom! Foreclosure bailouts.
Make money out there.
We
New
like
loan.
bailing people out of foreclosure. If you got a lot of equity in the property, might be able to pull some out to get you through a downtime, kind of like I was talking about before. Great. If you're an agent, you bring somebody to us, you help them out, we get a loan, you earn a commission. So that's a win-win-win right there. Another good thing that could happen from it is we might actually be able to go to the bank. Let's say you've been in default for a long time. We might be able to go to the bank and purchase that note at a discount and come back to you and be able to work out some sort of a situation. You know, imagine you are a year behind on your loan and you have to come in with $100,000 cash just to make it current. It's like impossible. But if we can go to the bank and buy the note at a discount, come back to you, create a new loan with lower payments, you might be able to become current. So that's a positive that you might end up actually owing less on the house because we were able to get a good discount. So that's a positive that you weren't expecting, is to pay less on your house.
Nice.
What other options? What's another positive silver lining that can come from having a client in foreclosure?
You can get a loan from us to buy the property at a foreclosure discount.
Right. So let's say you have a client whose property is getting foreclosed on and you like the property, right? Well, they want to sell it to get some money out of it. We could give you a loan to buy that property, and the good news is you're going to get a little bit of a discount buying the property because it's already in foreclosure, and that's just what it is. So, again, lots of good things. You could potentially get a loan out of it. The borrower might be able to get a principal reduction, and you might be able to buy a house at a discount getting a loan from us. So, three very good things that can come out of something that is not so great. All right, so thank you everybody for coming on. Thank you, Carla J, for giving us the rundown on how the foreclosure process works and how to benefit from it. Don't forget to come back next week. Next week we're going to be talking about something we were supposed to talk about 2 weeks ago before our streaming tech software decided to kill the show, and that's what happens after the loan funds. We're going to be talking about what happens with the notes, a little bit of our investor side so you understand more of the lifespan of what happens
ignore the number 67 on there.
Yeah, it's not 67. It's actually going to be show 70. It was going to be 67. Now it's going to be show 70. Next week, noon Pacific. That's it. All right. Thanks, everybody, for coming on. Thank you, Carla.
Thanks.
Look forward to doing a lot more deals together. Oh, subscribe or something. Like the show if you like it or not. Or if you don't, like it anyway. Like us. And I think we're muted at this point. Nope.
Okay.
Still whispering. You never really know when you're off there.